Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 372 on April the 26th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on NIO Inc, Pfizer Inc, and Lyft, and we discuss three new trades on the AdvisorShares Trust Pure U.S. Cannabis ETF, Norwegian Cruise Line Holdings, and SoFi Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets finished the week higher, giving glimmers of hope to U.S. investors. The Dow Jones Industrial Average gained 971 points, closing at 40,113 points. The S&P 500 index picked up 242 points, ending the week at 5,525 points. And now it's time for the topic of the week. The topic of the week is context. Have you ever had someone completely miss the point of a story or a topic because they had the wrong framing for it? They had the wrong context for the idea, and so their understanding of it was completely skewed. That happens in conversation quite a bit. Imagine if someone asked about your weekend and you said that you were with friends and the room was so loud. That's not enough information for me to understand the situation. Was it a restaurant that was too loud? Did you and your friends get floor seats to hear your favorite band perform a concert at your favorite venue? Context matters. Without context, you most likely will not have the information necessary to make good decisions. When it comes to financial markets, I get the most of my context, I get the best context from price data. I mentioned it on the show before, but I'm a fan of technical analysis. It helps me understand or put into better context the price action that is being exhibited in the market. If I tell you a stock is selling for $20 a share, you don't know if that's a good thing or a bad thing. If I tell you that it was $10 a share 3 weeks ago, that sounds like a pretty hot stock. If I tell you it was $30 3 weeks ago, that's a different conversation altogether. Looking at the history of price movement helps provide additional context for me to make better decisions in the market. The financial markets are complicated and competitive. I want to use all of the information that I have access to make the best decisions that I can. And if you ever want to talk about technical analysis or get me to take a look at a company you're considering, send me an email. I love doing that sort of thing, and I promise you, I will definitely respond. It might take me a little while depending on what's going on, but I'll respond. Speaking of, I'm a little late in posting this week's show, so consider this my early apology for being a couple of hours behind on my normal Saturday morning broadcast thing. Life threw me a curveball this week, more like a cantaloupe. My knee was the size of a cantaloupe from Monday evening until about lunchtime on Friday. Thankfully, there are people in my world that love me enough to push me to go see a doctor. And after going to urgent care and then being referred to an orthopedic surgeon, and then having that orthopedic surgeon pull more vials of random fluid out of my knee, I can walk again, which is great. And now it's just a matter of getting myself to not walk with a limp that I kind of memorized how to do to survive the pain of that pressure earlier. So it's been a crazy week. I know I'm a bit late, but man, I'm happy to get to the show and be able to record for you guys, even though this has absolutely nothing to do with trading options. You realize that there are things in life that do matter more than options. In fact, when I was speaking to my mother, she said to me, would you rather have more money to spend on stuff or the money to go fix your body and make sure that you can enjoy said stuff? The answer is clear. You need your body to work longer. So consider that a second topic of the week. Take care of your health so that you can have the ability to enjoy the rewards of your trading and your corporate careers. All right, so let's go ahead and dive into the review of last week's trades. We start off with the covered call on NIO Inc. Symbol N as in November, I as in India, O as in Oscar. At the time, the stock was trading for $3.52 per share. I looked at buying stock and selling the May 4 call at 13 cents, hoping for a return of 17.33% in 4 weeks. Well, shares of NIO grew 49 cents, ending the week at $4.01 per share. The call option we sold grew 14 cents, leaving us with a net profit of 35 cents if we were to close the trade out immediately. Just to keep that in perspective, that's a 10% return on cash in 1 week. Now, with the share price above $4, it looks like we are heading closer to our initial expected return of 17.33% on this trade. So that's great. There are still 3 weeks before expiration, so no adjustments are needed at this point. Definitely have a game plan in place for if you need to make an adjustment in the coming weeks, because anything can happen in these markets. Next up, we have a credit spread on Pfizer Inc., symbol P as in Papa, F as in Foxtrot, E as in Echo. At the time, the stock was trading for $22.14 per share. We looked at selling the May 22-21 put spread at 37 cents. That could give us a maximum possible loss of 63 cents per spread. Well, shares of Pfizer grew 79 cents, ending the week at $22.93 per share. The out-of-the-money put spread is even more out of the money now, which is great. We are more than $1 above our break-even price. Everything has worked on this trade so far, so no adjustments are needed, but I would certainly have a plan in place for how to manage this trade. You might prefer creating an iron condor by selling an upper strike call spread. You might prefer widening the spread or tightening the spread using strikes to adjust the amount of risk. You turn it into a 50-cent spread. You could turn it into a $2 spread, but just have a plan for the next 3 weeks to increase the likelihood that you finish this one with it being in the profit as well. And then our last trade from last week was a debit spread on Lyft Inc., symbol L as in Lima, Y as in Yankee, F as in Foxtrot, T as in Tango. At the time, the stock was trading for $11.16 per share. I looked at buying the May 10-11 call spread for 63 cents. That could give us a maximum gain of 37 cents, or that would be a 58.73% return in 4 weeks. Well, shares of Lyft finished the week 84 cents higher, closing at $12 per share. The in-the-money call spread that we bought is even more in the money. The stock price is well above the break-even price and the price of our short strike. So this trade is working out well, as planned. No adjustments are needed. Of course, that does not mean no monitoring is needed. Since we still have 3 weeks until expiration, all is well so far. Just keep an eye on this trade. So I'll take a moment and talk technical analysis. I like to use a couple of different moving averages in technical analysis. I use a 20-period moving average, and I say period instead of days because it depends on which time frames I'm looking at. Sometimes I'm looking at 1 minute chart data, sometimes 1 day, sometimes 1 month, sometimes weekly. It just depends. So I like using a 20-period moving average, and I like using a 60-period moving average. And one of the things that I'm seeing is that this recent uptick in stock price has moved us up to the 20-period moving average. That was true in Pfizer. I think that's also true in NIO. So you have to ask yourself whether we are going to bump off of this 20 period and head back lower or not. I'm seeing that in a lot of these companies. I don't read the future. My goal, honestly, in trading these days is to read the present and trade the present. Don't trade what's not there. Don't trade upcoming tariffs. Don't trade upcoming treasury bond interest rate changes unless your portfolio truly is designed for that and you truly feel like you are skilled in that. My best effort is to trade what I see at the moment and know that I have enough ability to adjust and alter my positions as new information comes into the market. So I'm sharing that as a heads up, both on all of these trades. This past week, all 3 trades worked out. I love that. Makes me feel great, makes me feel smart, and it makes my wallet happy too. That's a trifecta. However, there are also alarm signs going off when I'm saying, hey man, that's sitting right there at the 20 period. Maybe I need to watch this because we could push on through the 20 period and maybe we go back to the 60-day average, or price can pop right off of this and go in the other direction as people close out trades and take profit. So keep that in mind. Just a free a warning for you, or a piece of just something to just tell you to look out for. Now, we're going to go ahead and move into the trades for this upcoming week. We, of course, are 3 weeks away from the May expiration date of May 16th. That's for all of the monthly options in the month of May. And all the trades that we'll discuss on today's show will use that expiration. So that being said, let's get into the trades for this upcoming week. We're going to start off with the covered call. I'm looking at the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. The stock ended the week at $2.80 per share. I'm looking at buying stock and selling the May 3 call at 16 cents, hoping for a return of 12.86% in 3 weeks. You enter this trade by buying stock for $2.80 per share and selling the May 3 call at 16 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price is $2.64 per share. In real terms, the stock purchase will require $280 and you'll collect $16 for selling the option. Next up, we have a credit spread on Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. The stock ended the week at $17.24 per share. I'm looking at selling the May 17 16.5 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the May 17 put at 96 cents and concurrently buying the May 16 half put for 80 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $17 per share. The break-even price is $16.84. In real terms, you'll receive $16 per spread that you sell and have $34 at risk. Our final trade on the week is going to be a debit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. The stock ended the week at $12.88 per share. I'm looking at buying the May 12 half call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 3 weeks. Now you enter this trade by buying the May 12 call for $1.56 and concurrently selling the May 12 half call at $1.23. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $12.50 per share. The break-even price on this trade is $12.33. In real terms, you'll pay $33 to enter this spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys so much for listening. Thanks for following along with me on this journey. If you have any questions about the trades that I present, or even about some of your own positions, feel free to reach out to me. I really do like to help others, or at least I don't give financial advice, but I am happy to share how I might consider altering a situation or what I might do in a similar scenario. So it's always up to you. It's always your risk, your position. I'll tell people all the time, if I don't participate in the gain of the trade, I'm not going to participate in the risk of the loss. So I do not give financial advice, but I'm a good dude. I like helping good people. So if you're out there, let me know. Feel free to reach out. Email me is better than putting a note on the contact page of the website, but I do have a contact page in the website. You can always reach me there. Either way, find a way to reach me, and I definitely will reach back. All right. Hope you're well. Have a great weekend. Happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.